Thanks, Wei Su. Well, Singapore is reviewing its inflation forecasts because of significant uncertainty over its outlook in the near term. And this comes as the country's core inflation in December rose faster than projected, climbing 2.1% from a year earlier. Core inflation excludes accommodation and private transport costs. Higher travel costs through vaccinated travel lanes pushed up services inflation. Commodity prices such as food and oil have also gone up. These have contributed to the inflation outlook uncertainty. The headline consumer price index jumped to 4% on year in December. It's up from 3.8% the previous month. The country's core inflation rose 0.9% for the whole of last year compared to minus 0.2% in 2020. As COVID-19 restrictions ease and economic activities pick up, recovery in the labour market is expected to be more entrenched, but global inflation is set to push higher before easing gradually towards the end of the year.
This is really what I would characterize as a near perfect inflation storm, because not only is demand recovering, but on top of that, we have all these global supply chain bottlenecks that are actually exacerbating the price increases. And in addition, we're also starting to see some tightening pressure within the domestic labour market. So the wage adjustment, I think, is probably one of the key factors to watch for 2022 as well. Actually, the inflation pressures are highest for the top 20% by income. So if you look at the bottom 20%, they are facing slightly milder inflation compared to the other two key segments.
The CPI for general household items in the second half of last year saw a 3.1% increase. Costs of cars, accommodation, food and electricity helped push the CPI higher. These were partially offset by the lower costs of telecommunication services and clothing and footwear.